All right, friends. So, welcome to yet another episode on decoding SIF. And today we are decoding titanium hybrid long short SIF. Joining me today is Mr. Suraj Prakash Nanda, sir, who is from Tata Asset Management Company. He joined Tata in June 2024 as a fund manager in SIFs in the investment team. It's been a year now. He's responsible for two product launches from Tata in the SIF space. We have the hybrid long short SIF and the equity long short SIF. Before we jump into the product, I'll just take you through his background. He has worked as a fund manager, AIF long short at ICICI Prudential Asset Management Company, managing alternative investment strategies during his 9-year tenure at ICICI. Suraj sir also worked as an analyst covering multiple sectors and contributing to the investment research and decision making. Suraj sir holds a bachelor's degree in electronics and telecommunication engineering from Jadavpur University, that's from Kolkata, and MBA in finance from SP Jain, Mumbai. And he has successfully completed all the three levels of CFA program from CFA Institute, USA. So, welcome to my show, sir.
Thank you, Hitesh, for the introduction.
Right. So, sir, what we are doing in this series of decoding SIS is that we see that there are so many products which are getting launched almost every week right now. SIF is one of the most talked about subject amongst the client and the MFD fraternity. And यहाँ पर सर इतने सारे products हैं कि it becomes a bit difficult to understand the nuances of these products. So, which is where we're doing this series with you. आज के एपिसोड में ना सर हम लोग समझेंगे कि आपने जो टाइटेनियम हाइब्रिड लॉन्ग शॉट एसआईएफ लॉन्च किया है वो एग्जैक्टली क्या करता है, कैसे करता है. सो इन वेरी सिंपल लैंग्वेज सर, from an investor perspective, if you can take us through what is titanium hybrid long short SIF.
Yeah, so just to start, given that you said at the beginning that every hybrid long short is positioned in a very different way, that is a big problem for the investor, because normally the experience of the investor on the mutual fund side is that every category, the products in each of the category are very similar. So if you look at BAF category, all the products are BAF. If you look at aggressive hybrid, all the products are aggressive hybrid. If you look at flexi cap, all the products are flexi cap. So it becomes easier for the investor to choose between because you can compare the return and the risk characteristics of the different fund. But what has happened in hybrid long short, specifically under the SIF, is that it depends on how you are positioning the product. So there are products which are positioned like an arbitrage plus. There are products which are positioned like income plus arbitrage. Then there are products which are positioned like BAF or aggressive hybrid, right? So the way we have positioned our product is majorly on the BAF plus kind of a product, right? Cap positioning. So the BAF plus positioning means that your risk will be very similar to the BAF category, which is roughly around 8 to 10% standard deviation, and your beta will be also similar. So the most important thing for investors to look at is what the risk in the fund is. Because if you look at the volatility of arbitrage plus or equity savings kind of funds, you will see that their volatility is between 3 to 4%. Okay, if you look at an income plus arbitrage kind of products, you will see their volatility is around 1 to 2%. And if you look at the product which we have on the BAF plus side, you will see that the volatility is between 8 to 10%, which is the BAF category kind of volatility. So it is most important that people understand what the beta or the volatility of the fund is to understand what the positioning of the fund is, right? And why we did it as BAF plus is because if you look at the structure of hybrid long short SIF, the structure is way superior to what you have on the BAF side in the mutual fund. You have a very significant debt part, active debt, which is almost like a minimum 25%, which we need to have. A BAF kind of a fund does not have that kind of a debt category, debt allocation. Then if you look at the equity allocation, you will see that the flexibility in this product under SIF, you can move that net equity from minus 25 to 75 theoretically, right? In a BAF category, you will see that the net equity moves between 30 to 60%. right? Then the third thing is how efficiently you can move that net equity level, right, using derivatives. So in a BAF category, you see that it's majorly hedging or arbitrage through which you are moving it between 30 to 60%. In this kind of a product, you have both hedging as a strategy as well as the unhedged derivative, which SIF allows you to do. And as a result, you can decide which instrument to use. There are a lot of instruments how you can manage that net equity. You can either do direct arbitrage, you can do covered call. Now if you see covered call in a mutual fund structure, covered call is limited to only nifty 50 stocks. It is limited to only 15% of the portfolio. It is limited to only 30% of the position of the stocks. These kind of limitations are not there under SIF. If you have the entire portfolio, which is the cash equity under FNO, you can do covered call on the entire portfolio. So your hedging is also way superior in this product. And then the unhedged derivative, which SIF allows you to do. So there we can do paired long short as a strategy, thematic longs, thematic short. So just to give you an example, if you are negative on the IT sector at the beginning of the year, a normal long only product in a mutual fund or a normal product in the mutual fund, the minimum weight they can go on the IT sector is 0%. You can decide not to own the sector, right? Whereas in a SIF kind of category, you can take a negative position, negative weight on the sector, right? And you can generate returns on that. So in that way, what happens is that you can play on both the sides of the market, decide which sectors are doing well based on the thematics. You can see AI as a theme, how well it has done globally, so you can play that as a theme. Or you can see IT as a theme which got disrupted due to AI, right? So you can play that also. So in that way, what happens is that you are able to move that net equity way more efficiently and flexibly versus what a BAF does. So the structure of the product is very simple. You need to have a minimum 25% debt, so that we have, which is an active debt, where the yield on the portfolio is roughly 8%. Then on the remaining 75%, we have 50-55 rupees as cash equity, which is a fundamental long only equity. And the remaining 20-25%, we keep it in a less than 91-day T-bill, which is a cash equivalent and not counted in the gross exposure. And we use that as margin for the derivatives. Okay, so using that derivative, we will be able to move that net equity dynamically as per the valuations of the market. So in this product, we use the BAF model itself to decide what kind of net equity we want to run at. And we follow a very counter-cyclical valuation approach. When the valuations become expensive, we reduce that net equity or risk in the portfolio, we reduce it. And when valuations become cheap, like what we saw in the month of March, we increase that net equity when the markets correct significantly. So that is how we do it in a very simple way.
So, सर काफी अच्छा डिटेल में समझाया अभी. इफ आई वर टू अंडरस्टैंड दिस करेक्टली एंड आई एम जस्ट ट्राइंग टू रिफ्रेज व्हाट यू आर सेइंग, कि हम लोगों ने आज तक बैलेंस एडवांटेज फंड काफी सजेस्ट किया है इन्वेस्टर्स को, और बैलेंस एडवांटेज फंड में हम यही समझाते हैं कि देखो इट इज अ स्मार्ट फंड. सो व्हाट इट बेसिकली डज इज दैट इफ द मार्केट्स आर एक्सपेंसिव, वो आपके इक्विटी के लेवल को कम कर देंगे while taking arbitrage positions, right? और वही अगर मार्केट सस्ता है, like what it was in the case of March, then they will take up your net equity position by adding long positions, right?
Yes.
आप कह रहे हो कि यार मैं अपने प्रोडक्ट में वही सेम काम कर रहा हूँ. I follow the same technique that if the BAF model is telling me कि अभी equity let's say 40% चलाना है, तो मैं भी अपने प्रोडक्ट में शायद 40% के आसपास ही चलाऊंगा, right? It's just that in balance advantage fund we were using arbitrage as the only mechanism by which we were maintaining the equity taxation. Here you have better alternative options via the use of derivatives, जिसके थ्रू आप कर रहे हो.
Exactly.
So can I assume sir that basically राहुल सर की टीम जब बैलेंस एडवांटेज फंड चला रही है, तो उनके जो मॉडल के कंपोनेंट्स हैं, that actually helps you to take the net equity level in your portfolio?
No, so see, the model, the basics of the model are very similar, right?
Okay.
You use the valuation parameters. So we use Nifty 50, trailing 12-month earnings, P. We'll use Nifty 500 for the broader market, trailing 12 months. We'll use Nifty 50 price to book. market cap to GDP, earnings yield minus bond yield. So a lot of things are same, but Rahul's model has some other parameters also, which is like a momentum parameter, which is there, right? So there is some refining which I have done, because the fund which I was running in my previous organization, I use that model significantly over a period of time, and that has helped me a lot in managing that net equity, right? So I have done some changes in the model, but like I said, the basics remain the same, right? It is just that you have some parameters which have helped you in terms of determining the net equity level. And see, you understand whether the model has worked well only in the extremes. Okay, whether the model told you to increase that net equity significantly in the month of March is an example. If you look 2024, when the markets corrected, it was a very bull market post the elections. But was there a model which told to reduce that net equity significantly? That will be a understanding whether the model has worked properly for you, right? So based on that experience, you always tweak and see how the back testing of the model has been over the period of time. And it's a similar model based on the basic parameters, just some tweaks here and there, which help you to take those calls at the market extremes.
Right. So, sir, because the new part about this kind of an offering is the use of derivative strategies. And you just now said कि हम covered calls कर सकते हैं and हम futures sell कर सकते हैं, and you used a lot of terms. So for
Yeah.
the understanding of the larger audience, sir, अगर आप कुछ समझा सको इसके बारे में in depth थोड़ा, so that we understand how this derivative strategy is more like a risk mitigation strategy rather than a speculative positions that you take in the market. I mean, if you can talk on that side.
Yeah. So see, there are different strategies. Like I said, if you do arbitrage, then your risk is zero. It's similar to an arbitrage fund, right? Because then your risk is entirely zero if you have done arbitrage. Then you have covered call. Now, covered call is a selling of call option. Okay. Now, selling of call option, an option does not have a delta of one like what future has. Okay. So it will not give you full protection. But what it helps you to do, no, is to earn that premium income, and on top of that, have that discipline of profit booking across stocks, whatever has done well. So we don't do like covered call of the entire portfolio. We do covered call of stocks where the stocks have done well, and we are ready to deliver even if the stocks go up. So nobody knows whether the stock is going to go up significantly or down. But if you have that discipline where you want to keep on booking profits or manage the weights of the stock, you can do covered call, where you will be able to earn the premium income as well as do the profit booking. So that is how we use covered call. Then there is a paired long short strategy. In the paired long short strategy, what we do, within a similar sector, we do a long and a short, so that there is no asymmetric risk across sectors. So just to give an example, if I have a long on one auto stock and I do a short on some cement stock, then there is an asymmetric risk. The example is, if there is a GST cut which came last year, an auto sector did very well, cement did not do well, right? So you can't do across sector long short and say that I have a paired long short, right? Because then the asymmetric risk can play against you. So what we do is do it within the sector, so that you are able to manage the beta of the auto sector or cement sector in the portfolio. For example, in month of March, energy cost went up significantly. Now, energy is a very significant input for cement sector. Almost one third of the cost is energy, right? So if you have a cement stock and you know that the energy cost is going up, you can manage the beta by shorting another cement stock, right, which you think is fundamentally not that well placed versus the stock which you are long on, right? You can have a long on a stock which is a market share gainer, which can manage the cost very well, and on the other side you can short a stock which you think is not managing the cost very well. Similarly, on the auto side, you can have a long on the stock which you think is a market share gainer, and on the short side you can have a stock which you think is a market share loser, because there is no models pipeline out there. So in that way, what happens, you are able to manage the beta of the sector in the portfolio, and as a result, manage the risk of the entire portfolio. So that is how we do it, rather than doing a complete arbitrage of the stock which is there, or an auto or cement stock. So what happens is that, see, you don't know whether the war is going to stop tomorrow, right? So if it stops, you lose out on the upside also, right? So you want to be positive on the stocks where you are positive on. Rather, you can be short on the stocks where you are negative on, right? And as a result, what happens is that you are able to earn that return on the stock.
All right. So again, sir, let us try and understand this product. And आपने इसको BAF plus plus कहा था starting के अंदर में. So
Hmm.
I just want to understand the risk and return aspect of it. जैसे आप starting में risk समझा रहे थे through standard deviation, and you said that typically your product has a standard deviation of about 8 to 10%, right? So if I just want to juxtapose this in front of a balanced advantage fund as a category,
Hmm.
तो आप क्या देखते हो कि similar रिस्क है इसमें कि कुछ कम रिस्क है या कुछ ज्यादा रिस्क है?
No, what we have seen is that the risk is very similar to the category average. If you
ओके.
look at all the top 4, 5 balanced advantage funds, their volatility is between 8 to 10%. Now, if you are in
करेक्ट.
that range, it is okay. If your beta is
करेक्ट.
0.5, 0.6%, 0.5 to 0.6, that is what the beta of all the BAF funds are,
करेक्ट.
right? So
करेक्ट.
that itself defines that the risk is very similar to the BAF. And then you see what the returns you are generating, right? And that is where you say that it's a BAF plus. So that is what we have been able to do, where we have till now, over the 6 months which we have run the product, we are BAF plus 1.5 to 3% across different funds, and with the risk profile which is similar to BAF. Now you can't say that I will take the risk much higher than a BAF and deliver a BAF plus return, because that doesn't make sense. You should be able to deliver a BAF plus if you're taking a much higher risk. That is what the game is, that your risk has to be very same, because risk can play on both the sides. On the upside it will look very well, on the downside it will look very bad, right? So the risk has to be managed very well. That is what the I think the soul of SIF is, how you are managing the risk in the portfolio.
Right. So basically, sir, what you said is that the risk of your offering is very similar to the top funds in the BAF category in the
Yes,
industry. But आप
yes.
उसको BAF plus का category, आप उसको BAF plus का दर्जा इसलिए दे रहे हो because you say that while the traditional BAF products are using arbitrage as a main product, यहाँ पर आपके पास में better derivative strategies हैं, इस वजह से आप कुछ extra return बना पा रहे हो, and you are saying that hence you are able to deliver a better risk adjusted return to the investor, and hence this becomes a superior offering.
Yes, yes. So one is, the ability to use different instruments on the derivative side, which you don't have it on the MF side. Second thing, like I said at the beginning, your debt is very significant. So if you are
Yes.
having a yield of 8% on a minimum 25% of the portfolio, that itself is giving you 2%
2%.
return
Yeah.
per annum, right? So if you have all these extra things which the product allows you to do, you can do that BAF plus with a similar risk.
Okay. सर, कंसिडरिंग कि आपने पिछले 9 साल से आईसीआईसी में भी यही काम किया था, and in those 9 years you would have seen a COVID kind of an era. You would have seen that 2018 was a time when the mid and small caps were a lot of were beaten down, and you have seen what has happened in the market for last 2 years. So instead of asking you कि आपका back test क्या कहता है, I would rather ask you कि आपने जो किया था, and you would have run similar strategies in your last organization. What was the experience like in this particular strategy?
Yeah, so I used to run a product called Enhanced Dynamic Equity Fund in my previous
Okay.
organization. So that product was launched in 2022. And
Right.
like I was talking about the 2024 period, right, when the election happened and the valuations kept on going up despite slowdown on the ground. So you get those when you meet companies, no, you'll understand there is a slowdown in terms of execution, and the valuations keep going up. And when the models tell you that the value the price of the stock is not matching the earnings growth, right? So automatically the model will tell you to reduce. So in those kind of periods, I will tell you the BAF model told us to go to less than 20% net equity level, and the net equity which we were running was around 5 to 10% in the portfolio. Okay,
Wow.
so those are the kind of things which you have to do. Now, it's not that, when we reduce that net equity from July to September in a 3 month period from 45% to 10%. Okay, now if I am reducing that net equity, the markets are not going to fall tomorrow. So there is a time to increase beta in the fund. There is a time to reduce beta in the fund. There's a time to increase risk in the fund. There is a time to reduce the risk in the fund. But you have to be early. You can't say that I will reduce the net equity or risk in the portfolio after the markets are markets have fallen. You have to do it as per the model. You have to be early in that. So there will be periods of time where you will be doing it before the market falls, right? So you have to keep on. But generally, if you see from October to Feb, the markets crashed, right? And that is
Correct.
where you are able to give that protection and the alpha generation. See, one thing people have to understand, that in SIF, people think that because of the usage of derivatives, you will be generating alpha on the upside, right? See, the maximum net equity, which a normal SIF, I'm not talking about hybrid long short here, but in a normal SIF, the net equity maximum you can go is 100%, because you are not allowed leverage in a pure equity product, right? Because I'm not allowed leverage, I can go maximum 100%. A long only product can also go 100%, right? So logically, if you see, leave aside the stock selection, sector selection, you are the maximum you can do is meet the return of long only on the upside. But it
Correct.
is your ability to protect the downside by reducing that net equity, that is what differentiates this product versus a mutual fund product. And that is what you have to do as per the model. So the alpha generation in these kind of products will come on the downside, where you are able to protect. Now the other thing is, which I will make it clear, it's not that the product will not fall, it will fall.
Yes.
The objective is
Yes.
to fall less. Okay, this
Yes.
is not an absolute return product which we are doing. There are people who are doing absolute return product. What we are doing is not an absolute return product, because we have that net equity at every point of time, which is positive, right? So when the markets fall, we do fall, but the objective is to fall less and to increase that net equity when the markets are correcting, valuations are correcting, so that when the markets turn, you are able to capture much on the upside. So that is why, that is how, we have designed the product, that on the downside we capture 20 to 40%, on the upside we capture 60 to 80, 100%.
That's a very good capture ratio in that
Yeah.
case. So just but मैं सर आपसे ये पूछना चाहूंगा कि let's say typically a balance advantage fund kind of a product is offered to investors who are of moderate risk profile, or let's say people who are retiring and they have a retirement purpose, उनको हम कहते हैं कि सर आप अपना पैसा बैलेंस एडवांटेज फंड या इक्विटी सेविंग्स या हाइब्रिड कंजर्वेटिव या मल्टी एसेट में आप एलोकेट करिए. तो पहला क्वेश्चन तो सर कि क्या ये ऑफरिंग इज आल्सो सूटेबल फॉर देम, एंड टू let's talk about extreme scenarios also. For example, आपने बैक टेस्ट में अगर चेक किया हो कि in a COVID like scenario or in a 2018 like scenario, how would the funds have performed in an absolute manner in that particular drawdown period? Eventually, it would have all recovered, but just to have an understanding of the experience that an investor can get.
See, the thing is that in a binary kind of event, take this war or COVID, there you can't protect, right? It is whatever net equity you were running at, suddenly, things turned worse. If you remember Feb weekend, last weekend, the last weekend, the war started. So what can you
Yes.
do? Our net equity was 51, 52% at that point of time, right? But if you take the example of 2024, where the valuations became extreme, we were ready in terms of by reducing that net equity and the risk in the portfolio. So for binary events, no, you can't do much. If it is a COVID or a war, or a budget day, you can't do much, or an election day volatility which we see, right? You can't do much in those kind of scenarios. But if it is more valuation led, obviously you can manage the risk in those kind of scenarios. So you will be able to manage the risk where you are following a very fundamental approach to the valuation, and you are reducing that risk or increasing that risk. But for binary events, no, you are almost in a similar boat, because see, the VIX increases significantly on the first day itself, right? So you can't do much using derivatives. The only thing you can do is use, take the VIX into your advantage. So, for example, you do a lot of covered call, right? Because the premiums you're getting is way higher when the volatility increases. So you have to use whatever you can use in those kind of scenarios. But binary events, you can't do much. You will be reactive in that kind of a scenario. Now, on election day, if you remember 2024, pre-election, the markets were up, post-election, the markets were down.
Correct.
Right.
Correct.
So, if pre-election markets were up and you had taken a long position, on the counting day, you will be jacked. Right. So, on a binary event, you can't do much. Rather, not do much actually on the derivative. Just manage your net equity as per the model. Don't bring your human psychology into factor. Okay, follow the model. Whereas if it is more valuation led risks which you see in the market, then you can follow a proper, how you want to manage the risk, you want to reduce the risk, and whenever there is a very significant downfall in the market, you can increase that risk, right, gradually, as the model says. So what I have seen is that the model works perfectly in this kind of sense because it follows a very traditional approach of valuation.
राइट सो जैसे सर हम लोग नॉर्मली पैफ मैफ को हम रिटायरी इन्वेस्टर्स के लिए सुटेबल मानते हैं एंड द रिटर्न एक्सपेक्टेशंस दैट द इन्वेस्टर्स हैज इज लाइक टिपिकली एफडी प्लस 2 to 3% is
Yeah.
what a typical BAF product is supposed to give you. So can we use the same analogies over here and can we, I mean, call this product in the same breath as we say for BAF?
Yeah, yeah. So that is what we are seeing. That is why I focused on the risk part, right? So if
Yes.
the risk is very similar, a similar investor can invest in that, right? It's not, and if you see the risk return graph, you have a risk graph on the x-axis and return on the
Yes.
y-axis. If you have a product here which has a given risk and a return, and if I place a similar product on top of it with the same risk and higher return, which one will you choose?
The
Right?
efficient product,
Yeah.
yes.
So it's the basis of that. So, like I said, we focus on managing the risk very similar to the BAF category, and the objective is to give a BAF plus return on
Experience.
top of it.
ओके सो सर इस प्रोडक्ट का भी हम टिपिकल इन्वेस्टमेंट टाइम होराइजन 5 years मान के चलें आई मीन फॉर एनीबॉडी हु इज ट्राइंग टू अटेम्प्ट दिस प्रोडक्ट
Yeah, yeah. So see, the time horizon, I think for all the products in SIF is the 3 to 5 years because, like I said, these products are not designed to play the bull market because the maximum net equity I can take is 100%. Maximum net equity long only can take is 100%. These products are designed to play the market cycle because the objective of these products is to manage the volatility for the investor very well so that they get a better risk adjusted returns. And the way to manage that volatility period is you have to play that entire market cycle. If you are able to play that market cycle and take the investor through those volatility periods well, you will see that the investor will get a much better risk adjusted returns.
राइट राइट ओके सो आई थिंक सर आपने प्रोडक्ट तो बहुत अच्छे से एक्सप्लेन कर ही दिया एंड नाउ आई हैव अ वेरी बेटर अंडरस्टैंडिंग ऑफ द रिस्क एंड रिटर्न ऑल आई आल्सो अंडरस्टैंड इज द फैक्ट कि last week when I was interviewing Gorick sir from Platinum Hybrid Long Short SIF, so they use a very different strategy, and that is where they call their product as an FD plus plus product. So basically, one key takeaway is that while each of these products might have the similar surname, as I would call it, a similar category called hybrid long short, but each fund has a different investment strategy and hence a risk return mandate that they are trying to achieve. So not the two funds are similar. So yours is more like a BAF plus plus. Okay, so
Yes.
one final question, sir, because I have a fund manager on my show. So I would really want to ask that in the current market environment, and since you are stressing so much on the valuation part of it, what are the valuations looking like today? आप अभी कितना equity, net equity आप run कर रहे हो? And what is the suggestion in these current environment?
See, the current environment, if you see geopolitically, it's a bit of a red signal given you see the crude prices again going up. Whatever destruction happened on refinery and the supply chain disruptions will take their own time to come up, given that the war settles down first. Okay, so and what we have seen is that post March, the mid cap and small cap have done very well, and the large caps have have done normally because of FII selling, which we have seen over the last 2 years. So the most important part for the markets to do well is first thing the growth in the GDP, nominal GDP growth has to be in double digit, because if you see the valuations of market, Nifty 50 trailing 12 months is 20 to 23 times, right? And if you are giving a high single digit nominal GDP growth, that which will be the revenue growth of Nifty, so I don't think FIIs will be very enthused with that, right? In terms of getting into Nifty 50, the large cap space. But we have seen mid caps and small caps do well because the returns have been good. But we have to also see how the next 2 quarters are, because the impact of input cost increasing will be visible. and that you can see with the working capital increasing across companies. You are seeing banks credit growth to corporate increasing majorly because of the working capital, right? So the next 2 quarters will be very important for the mid cap and the small cap, at least because those stocks have done very well. Mid cap and small cap index are its peak, so one has to be careful in that sense, given what earnings growth or forecast is in the price right now. Whereas on the large cap side, you can see that there has been disappointment on the earnings growth, and there's a lot of FII selling which has happened, and as a result, the large cap is still favorable. You can see banking, large private banks, PSU banks, some of the large mega cap companies, IT stocks have also corrected because of AI. And if this anti-AI thesis plays out, there could be some FII money which could flow from the emerging markets like Korea, Korea, China, Taiwan to India, right? So if that flows, no, it is the Nifty 50 which will do well, right? So I think it is one should be more oriented towards large cap right now, and on the mid cap and small cap, I think one should be careful on the growth part. If the inflation picks up because of this disruption, it could at some point of time impact the demand side, and that will impact the growth, which will then impact the multiple, which is high for these companies.
Right. So अभी सर आप लोग कितना नेट इक्विटी चला रहे हो अपने फंड में?
So अभी हम लोग का net equity in hybrid long short, we are roughly around 54% of net equity level. And like I said, we follow a very counter-cyclical valuation approach. So if I say December end, we were at a 48% net equity level. January markets corrected 3%. We increased it to 52%. Feb markets were volatile but flat. We were at 52%. March markets corrected 12%. We increased it to 60 plus.
Right.
April markets moved up 8% due to
Yeah.
short covering. So we were back to 50 to 53%. May markets corrected 2%. We increased it to 55%. June markets were up 2%. So we are at roughly 53 to 55% of net equity right now.
Right. Okay. I think that is it from my side, sir. एकदम clear understanding हो गई आपसे बात करके कि this is like an elder brother of balance advantage fund category, I'll say. Is similar returns, but a much better risk framework. And hence, on that efficiency framework, efficiency frontier, this product should be a better fit. And hence, this product is suitable for any and every investor who has like a moderate risk profile or who is looking for asset allocation. And at the same time, जिनका minimum 3 to 5 years का holding period हो, उनके लिए ये product अच्छा है. And the experience should be like one can look at like an FD plus 2 to 3%. In the current market environment, what you're saying is that we are fairly valued. We are not overly valued or undervalued. We are fairly valued, at least on the large cap side, which is where you are running around 52% net equity right now. And it's a long-term product, is what I can understand.
Yeah.
Perfect. So thank you so much, sir, for taking out your time. And
Thank you.
we will again host you very soon to talk about the equity long short SIF also. And once we have some more experience in that product, sir.
Thank you, Hitesh. Thanks for it.
Thank you.